Two big IPOs today. We're going to keep Pickert busy all day, no doubt.
Okay,
but
great.
here's the thing. Does the Lyft disaster, and I don't think it's too strong of a word, down 23% from the IPO to call it a disaster. Does the Lyft disaster sort of cloud these two IPOs, or can they stand on their own?
Absolutely not. They're absolutely going to stand on their own today, and it is a bit of a harsh word, Brian, to use, disaster.
Is it too strong?
Too strong. Absolutely too strong.
You think so?
Absolutely.
What is it, 60%, John, of Lyft stock is sold
Being
short?
reported.
It's down 24%.
Isn't that amazing? How can something be two-thirds short interest after an IPO? And I tell you, when they report earnings, Lyft does on May 7th, any incremental positive news is going to cause a bit of a short squeeze and a turn to the upside.
Yeah, you know, Leslie, John makes a good point. By the way, we knew you would. That's why you're on television right now. Which is that if we do, and I want to focus on Pinterest and Zoom in a second, but Lyft is sort of out there, kind of hovering around. If Lyft does get some kind of big number, all those shorts are going to scramble. Lyft could turn quickly.
That's the amazing thing. I mean, we haven't even seen the analyst reports come out of the underwriting firms yet. That's expected about next week. So we really haven't seen any news that would change the fundamental picture of Lyft. And yet we're seeing so much volume on that stock, so much volatility on that stock on a daily basis. So you can imagine what would happen when we actually get some real news as it pertains to Lyft.
Okay, let's focus on these companies. John, if you had to pick one, Pinterest or Zoom, because this is TV, we're going to put you on the spot. Which one do you think is going to be a more well-received public offering?
Am I allowed to choose both?
No.
Okay.
Pick one.
I really like Zoom. I do like how they approached this deal and how they priced it. It obviously increased its range and then priced above its range. So you're seeing a lot of strong demand. And like Leslie, like you spoke about, I do feel like a lot of the anchor tenants, your top 10 investors, are extremely strong in this book.
Yeah, and it's also a profitable company. It is a company that is used by Wall Street firms. Forget about the used by Wall Street firms. Does the fact that it makes money and Pinterest does not? It's going to sound like a stupid question, but does that matter?
It's a recurring question, and the profitability or not. Again, it's the longer-term thesis that these anchor tenants are looking at. It's not today, it's not tomorrow, and it's a longer-term investment.
Leslie, when you do your reporting, what have you heard? I mean, Zoom is well known to Wall Streeters. I wonder if Pinterest, you know, being maybe not the most Wall Street-centric type product, does that hurt it or damage it in any way?
No, I think that's a really good point that you make there. With Zoom's profitability, they have about $7 million in net income for 2019, their fiscal 2019 year. So it's not out of the box, profitability for that company. But I think what Wall Street really wants to see, and the questions that they have about some of the other unicorns that are going public, is can you get to that level of profitability? Right. Zoom has already demonstrated that it can. Pinterest's net losses are narrowing over time. Some of these other companies, namely Lyft and Uber, they're seeing their losses kind of expand over time. So Wall Street really just wants to make sure that these companies actually have the ability to one day be profitable. And that's kind of at the forefront of their mind these days.
I agree with you 100% there, Leslie, and it will be something to look at today and how it trades. But I just want to reinforce as well, on its first day of trading doesn't dictate how that investment's going to do.
Bingo. By the way, the first month doesn't dictate.
No, and look at Facebook. How many IPOs, Brian, have there been since Facebook? Hundreds. And everyone was like, well, wow, look at the disaster, the harsh word you used at the beginning of this segment of Facebook, sold off 50% over the next 90 days to only rally 800%.
Listen, it's a great point, and I probably should have said disaster so far, because the point I tried to make following up is 60% of the float sold short. Analysts have not been out on this name yet as well.
We haven't seen
Everybody's
earnings.
Piling on. Lyft is this, Lyft is that. I'll tell you what, in 2 months, Lyft could be 50% higher than it is now based on that, or not, but based on that short interest. And a lot of people are going to have to eat their words.
Have you ever been on the other side of a short squeeze?
I have not, but I've witnessed them from afar.
It's extremely painful, and those that are going to get caught short on any positive news, they're going to be looking to exit and head for the upside.
Yeah, and by the way, for our viewers that are not sort of in this world that much, a 60% short interest, 60% of the stock borrowed and sold short
is massive.
I'm trying to go back to the days of the fights over the company Taser and Herbalife. I can't think of a stock that had that high of short interest. That was a known name and not some little mini micro cap.
So there's a lot of attention on this one, and any headline, a lot of headline risk on that short squeeze.
Leslie, I know you've been all over this story. What are people on desks, I want to go back to Lyft, telling you about this? I mean, really, it's unbelievable to have a new stock.
It's amazing.
That is that short.
It's a new stock, but it has a very big float. I mean, this company sold $2 billion worth of shares in its IPO. So we're not talking about 50% of a $100 million IPO here. This is, upwards of, $1 billion worth of stocks that people have lent out in order to shorten the market. Now, there's been all sorts of reports about kind of why people are short, the different incentives put forth by the various brokerages on the street to bring people, to bet against this company. That has brought out even more speculation, brought even more people into kind of the shorting side of this trade.
Right, and part of that too is not so much the speculation of actually being negative on the company, but preserving that capital initial investment.